Welcome to Mastering the Sweeps, a Nueva Voz trading series. Here, we apply the Lighthouse strategy, a disciplined approach to observing liquidity, structure, and probability in the market. So remember, your job is not just to find trades, your job is to observe the market until it reveals one. Most traders look at equal highs and think resistance. But institutions look at the same level and see liquidity. Same chart, different understandings. And that difference is why most traders lose. So today I created this PowerPoint of just an intention and care so that you guys can truly understand equal highs and lows because that is the foundation towards everything. So I hope that you guys will enjoy this lesson. Like always, I'm going to try my best to keep it under or about 20 minutes. Okay, so let's stay locked in. Let's learn all that we can and make sure that you comment below so that I can see what have you been learning, what have you been applying, okay, or any little tips and tricks that you guys would like to see from me. By the end of this, you're not just going to see equal highs and lows as levels anymore. You're going to see them as target price is moving towards. And once that click, oh my goodness, you're going to stop reacting and start anticipating. That's the key. So, are you guys ready? All right, let's go ahead and get started. Okay, so as I said before, we're learning about equal highs and lows, but not just equal highs and lows, what retail see and what institutions see. Just a quick breakdown on vocabulary. If you did not know that they refer traders like you and I, regular just people with um, a lower scale of money, we are retail traders. So our money really doesn't move the market, but we can participate. Now, institutions like Wells Fargo, the banks, just different institutions, like just think about institutions in general, companies, what they see. Okay, so we're really going to just dive in deep with great value. Super excited. Let's go ahead and get started. Okay, so let's just start simple, equal highs and equal lows. Okay, so when you think of an equal high, think of resistance. An equal low, think of support. That's what retail traders will say it is. Um, because really and truly, that's what most people are taught. So the logic becomes price hits resistance, so it's going to sell, or price hits support, it's going to buy. And honestly, it makes sense at first. You know what I mean? And basically, an equal high is just when price reaches the same level more than once. And I have pictures too. So if you are a visual learner like I am, just wait. I got you. And I just want you to pause real quick. Just think. How many times have you seen price hit a level? And instead of reversing, like, they taught us it will do, it just breaks right through it. That's where the confusion starts because retail is taught, you and I are taught, price reacts from levels like resistance and support. But now we're moving away from calling it resistance and support to equal highs and equal lows. And the key thing is price does not actually move just like that. It doesn't just go into the resistance area or the support area and always react. So now for my visual students. Okay, so if you see right here, I will make the picture bigger. Okay, so this line, the top line right here, this what most retail people are still calling resistance. And down here, most people call this area support. But we're moving away from retail language and moving towards institutional language. Okay? So basically, an equal high or the equal lows are just multiple touches. What are touches? I did the extra work for you. So the touches, I have a little purple circle so you can see. So you can clearly see that the market had these touches on these lines, on these levels. Okay? And if you just really break it down to the simplest term, this is your consolidation. But today isn't about consolidation, so I'm not even going to dive deep about it. Just know when the price is in a range and is going back and forth and it's not breaking out, then that is consolidating, going side to side. And if you don't know what a breakout is, it's okay. A breakout is when literally the price goes out of the zone, out of the equal low, or out of the equal high. I just want to show you one direction so that your mind doesn't get confused. Because at first I had two arrows, and then I was really looking at it, and I was like, maybe you guys would get confused. I don't know what level everybody is on. So I just kept it simple. Know that it can break out either direction. That is key. And truly, the main difference between a retail trader and an institutional trader is that the language is different. So, where they see equal highs, retail people say resistance. Where they see equal lows, and the they that I'm talking about is institutions. What they see is equal lows, but what retail people see is a support. Okay. And again, a retail perspective, when price is at the resistance area, they just automatically expect the market to reverse down. Maybe sometimes it does, but not always. Okay, because like right here, it finally broke out. Personally, I do not trade when price is in a range, a consolidation range. One, because you don't know when price will break out. It's unpredictable. That's just me personally. All right. So I have created both so you can see a side by side from a institutional perspective versus a retail perspective. Make sure you screenshot this. Here's a closer view. And we're about to dive into this. Just take a screenshot. 3, 2, 1. And then take a screenshot of what retail people think. 3, 2, 1. All right. Okay, so let's dive in deep with what institutions see. Okay. All right. So as you can see, they think a little bit different. They see liquidity, they see touches, they also have equal highs, and they still see the touches, but they have other requirements as well, or just other knowledge too. But now you caught up, okay? So now we're shifting perspective. Institutions don't see resistance, they see orders sitting above it. or below it, depending on what area you're talking about. Here, the stops are above. Here, the stops are below. And I'm talking about stop losses too. So just think about it. Where do traders place stop losses? Usually under the resistance and support. Remember, that is a retail language. Because usually retail people put their stop losses there. They again put it above and below equal highs and lows. So what does that create? It creates a cluster of orders, a pool of liquidity. Again, equal highs equal buy side liquidity. If you've seen my other videos, you know that I have introduced you into that vocabulary. And if not, don't truly worry about it. Just know that you're going to see it a lot in my classes. And then they also have sell side liquidity. And here's the truth. Price is not avoiding these levels. Price is moving towards them. And I'm going to say that again. Price is not avoiding the levels where it has equal high, those touches, or those equal lows, those touches at the bottom. No, they're not avoiding them. They're literally moving towards them. So this is why it's super important to know what equal lows and equal highs are, or buy side liquidity and sell side liquidity are, because once you know that price is moving towards these areas, you can predict, or you can get a better chance to earn more money because you know how the market moves. Now, again, just a quick breakdown about where liquidity comes from. Again, it comes from stop losses, orders that are going to be inputted, like the buy stops or buy limits, sell stops or sell limits. And most importantly, this is the knowledge you need to know. The market moves towards liquidity. Okay, so what truly happens at liquidity? Once again, you have your stops triggered, liquidity is taken, orders are being filled, and I'm talking about institutional orders, big money, okay? And then market reacts. So this is basically how it will look like. So this was a uptrend before, and we had some touches at the equal high, and we also had some touches at the equal low. Okay, we have our sequence, but again, we're not focused on the sequence. I just wanted to show you what it looks like in a real situation. Because remember, institutions don't trade like retail. They don't just click buy or sell. They need volume, orders, liquidity, so they move price into areas where those orders already exist. So, prime example, because we had out multiple touches, the market already took the stop losses from above, and then they move aggressively away, and then the other sequence continues. So the real question truly becomes this, okay? Is price reacting to the level, or is it going there on purpose? One more time. Is price reacting to the level, or is it going there on purpose? So, for example, this was a reaction. This was a move on purpose. The market wanted to go to the equal low. there was some money and they took it and they moved away from it. So start implementing that question into your own trading days. And now, here's what I learned this week while I was going through my equal, high, and low lessons. So there are three different types of liquidity sweeps. What phases? Before the sweep, at the sweep, and after the sweep. I don't trade before or at the sweep. I'll wait to the after the sweep. Why? Because the market hasn't made its true push towards liquidity yet. But after the sweep has confirmed the structure to start for me, then it gives me an extra confirmation. That's just a little tip that I learned throughout my week of practicing. Another thing that is super important is to know your time frames. Take a picture of this. And something that really truly helped me this week was that I was kind of confused about my my sequence that I look for, because I know my sequence, but sometimes it happens in the internal move on the lower time frame, sorry, on a higher time frame, but I don't see it on the lower time frame. So what I learned, trying to condense it, is that when you look at the 1 hour or above, that is where you look at your strictly for the direction, where can the market goes. And then on the 15 minute, you're looking for whatever your strategy is. If your strategy is the lighthouse strategy that I teach, perfect. You need to start looking for that same pattern on the 15 minute, but use the hour or higher to see where the location of the market can go towards. And then just a quick model from that I do. I identify my liquidity. I wait for my sweep, like I was talking about, and then I observe the reaction. And this is what I was telling you guys about my pre-sweep, sweep, and then post-sweep. This is what not to do. Don't trade before the sweep. One, because you don't know what's the true move. You want to be on the side of institutions because they truly have the power to move the market. And then also, don't always assume reversals, because sometimes it doesn't. That one mindset will save you so much money. Also, this is what I was talking about with the 15 minute. Just look for your pattern, whatever your strategy is, and focus on that pattern, okay? But you use your higher time frame, an hour or above, to see the true directions, so that those noises, like the random movements of the market, doesn't confuse you. You know exactly what's happening. And then also, number one, don't force the setup. If it's not there, wait for another day. Because in trading, it's all about not just hitting the buy and the sell button. Anybody can do that. The skill is to keep the money that you earn from the market. So learn these four things, and you already can avoid at least 90% of beginner mistakes. And you know I wouldn't be a good teacher if I'm only telling you what not to do. Alright, so now here's what you can do. Look at your steps. Again, if you are following along with the lighthouse strategy, you have to look for your liquidity sweep. confirmation, the move away from the liquidity sweep. And then your entry logic. Stay with your rules. Live in your rules. Practice your rules every day. Because the more that you practice, the better you get. And it will become, it's kind of like language. If you want to practice a language, you must go at it every day in order to be fluent. Well, in order to be fluent in the market, you must practice the same steps every single day. And now that you have extra knowledge that you can take back, this is what changes everything. You're no longer buying support or selling resistance. You are waiting for liquidity to be taken, then reacting after confirmation. What's your confirmation? Your displacement, your change of direction, and then you can start looking for your injury. Those filters are very important. Okay, so now let's tie it into your behavior. Okay, so before you were thinking, okay, so price will, reverse here. No, you're no longer in that behavior. You're no longer thinking about, oh, okay, so the market is at this line at the top, which I call resistance, and I know that is going to reverse. No, we're past that now. If you can leave with something, get away from that idea that price has to react when it is towards a resistance and a support. Now you're a person who waits for the market to confirm your direction, because now you're making trading fit into your life. Now you have confirmation for your strategy. You're reading the market like institutions now. And this is the biggest difference between guessing and actually getting paid. This small little shift from thinking that price will reverse here to waiting for the market to confirm what you want to see. All right, make sure that you screenshot this, because now this is your time to practice. Okay, so when you are practicing in the market, don't just look for trades. Answer these questions, okay? First, mark your equal, high, and low. Ask these three questions, which are: where's liquidity? Has it been taken? What phase is price in? When you can answer those three confidently and clearly, you have mastered the first step in the lighthouse strategy. And then everything else is easier because you have that foundation. You have step one. So when you go into practice, use these same exact questions to help you locate your starting point. Okay, so this week is not about trading. Don't worry about entries. Don't worry about setups. This week is about training your eyes to see where liquidity exists, where is price going. And I use the word liquidity, but it's interchangeable. So if you're still confused about liquidity, I'm going to go back to what the vocabulary is for this video. Where equal high and equal low exist, and where price is going. Because once you can see that clearly, everything else becomes easier, like I said before. Okay, so we're about to go into a real chart application. And you remember the three steps that you need. Okay? The questions: where is liquidity? Has it been taken? What price? What phase is price in? This is your process. Okay? Screenshot it if you didn't do it before. We're about to practice. All right, here we go. All right, so now is your time to ask those three questions. And if you forgot the three questions, it's okay. It's right here. I'll make it bigger. Remember, you're looking for: where is liquidity? Has it been taken? What phases is price in? Okay, so let's check your answers. Where's liquidity? Remember, it's above the equal highs, below the equal lows. Has it been taken? I would say yes, because look at this candle. And then just a little bit, like if the stop losses were super short, I wouldn't say that, but I would say a little bit. I would say for some people, because it could have went deeper, but it did do it. So I would say liquidity is above and below. Has it been taken? I would say yes. What phase is priced in? So now it's no longer inside the range. It is broken out. Okay? And it's trying to trend. So how did you guys do? Please comment below. I hope that you truly enjoyed this PowerPoint that I created. I promise I took my time when I was creating this. I was thinking about all of you. Just remember, this week again, just open up your chart. Just open up a chart. Don't look to enter trades, because that is where pressure and tension comes from. Only ask yourself, where is liquidity and has it been taken? Where is liquidity and has it been taken? I hope that you have a wonderful day. I will see you next week. And thank you again for just following along my journey of just studying the market. And now I'm learning how to teach others. So I love that. Remember to comment one thing that you learned today. Have an amazing day.